Hello everyone and welcome back. The topic of today is gonna be dollar cost averaging. For some of you, this may be a completely new concept, but for some of you, this is a well-known strategy and you probably already use it. But I'm gonna give you my take on it, how I DCA, and basically it's not just a simple DCA where I every week, for example, buy a certain amount, but I use a little bit of dynamic DCA, and I'm going to be explaining to you how exactly I dollar cost average. So first of all, let's just have a quick look how DCA works. So basically what you do with this strategy is you set an amount in dollars, how much you want to invest, and then basically you repeatedly purchase it per week or per month or even daily. You can purchase the same amount and you don't give a damn about the price action. That's the main point of this strategy, that you just choose your risk, choose basically how much you are willing to lose, and basically you just stick to it and you buy in any environment. So let's take a look how much you would have made if you invested $10 per week starting in the last pre-halving year, which was in 2019, let's say in September. Okay, by the way, this website is Into the Cryptoverse by Benjamin Cohen. I highly recommend you checking out his YouTube channel, but also his website. This DCA simulator is for free actually, so you can play around with it, and it's a really useful tool. So I'm gonna put September 9th. So that would mean you've been dollar cost averaging over 4 years. You would have totally invested around $2,090, and your current value would have been $3,090, and that would mean roughly a 50% gains, okay, in 4 years. So basically that's more than 10% annual yield, which we know is already better than the S&P's average annual yield. Okay, so even if you wouldn't strategize any further, you would have been in gains, you would have made money, and that's our main goal right here, okay? To make money, but most importantly, to preserve money, okay? We don't want to be losing money. We want to keep the value of our dollars. And as we know, with the rising inflation and the rising amount of money supply in the economy, they are basically losing value. And that's why we use assets like, for example, the Bitcoin to hedge against this inflation, because Bitcoin is basically rising together with the inflation, and that way we can beat inflation and keep the value of our money. Okay, so but let's say that you don't just DCA mindlessly and you don't sell at the high peaks, but you also try to DCA out of the market when the market is overextended. But how do you specify if the market is overextended or not? And we can do that very simply by another tool by this website, and that's basically checking the whole crypto market cap and their trend lines. So for example, you can set a rule that if the market cap is below its fair value, you DCA into the market. And on the opposite, if the market is above this fair value, you would DCA out of the market. So basically, if you would do this, you would only accumulate when the price of Bitcoin is under its fair value, and therefore you would accumulate at low risk levels, and that could mean more potential gains for you, and you would basically be selling in the overextended periods of the market. We can also take a look at the logarithmic regression bands. This one is also for free, and the same thing goes on here. I zoom in a little bit, let's say only from 2019, and let's say you would again only DCA in the parts where the price of Bitcoin moves under this green, which are basically the non-bubble prices, and anywhere where the price of Bitcoin would be above this non-bubble upper band, you would basically either just wait a little bit for higher prices, or you would start to DCA out of the market. Okay, so this way you can basically dynamically DCA in and out of the market and maximize your returns. So this is the strategy pretty much that I use. I also like to DCA higher dollar amounts when we are close to this lower band like we are right now, because these are very, very good times to be accumulating Bitcoin if you're interested in the long run. Okay, so my goal is not to be selling Bitcoin in the next few months. I'm really here for the long run, let's say 2 to 5 years. I don't care. I'm ready to hold it because I've been here in the market for over 5 years now. I know how much it pays off if you just wait, but it's good to be DCAing out when we are overextended, not just to stay greedy and think that the price goes higher and higher, because then you just stay in the market and you don't realize any profits. Okay, so guys, that's it for today. I hope you liked the video. Make sure to like and subscribe, and please let me know in the comment section what you would like to hear next. In case I didn't explain some part good enough, please let me know and I will explain it in the next video or in the comment section. Thank you so much for watching. I hope you had some value out of this, and see you next time.